Well, I think it's endemic of a bear market, right? I mean, in bear markets, there's nowhere to run, there's nowhere to hide, and when you start taking out leaders like this, it's usually a sign that they're starting to get to everybody. Importantly, Apple broke down through that 150 support level, and that was an important support level because it really represented the potential for the completion of a double top. And so, between 180 and 150 now is this relatively large distribution zone over the last 6 months, and that counts downward of about 120 on the chart. So certainly we could get a reprieve in the near term, rally it back up to that resistance level, which is now 150. But I do think that the trend is turning in Apple, and we probably have some more downside to go. Again, 120 is the crosshairs that we're looking at here.
Yeah, another 20 bucks lower than right now. Jeff, you said it's a pattern in the bear market when they start coming for everybody, right? First it was speculative tech, and then it goes into Apple, which has better balance sheet dynamics. So does that typically happen toward the end of a bear market, in the middle? Does it signify anything about where the broader market is going?
Well, it certainly happens closer to the end than the beginning, but I wouldn't say it's the end. Unfortunately, Apple is in tech, and tech is in the crosshairs of part of that cyclical trade that tends to have some of the most volatile downside to it. So I think that's endemic, that they're hitting a leadership within a weak group. So that's something to keep in mind. It's when they start taking out utilities, when they start taking out some of the staple names and some of the things that you would expect to be really safe havens in even a bear market, that you start to really triangulate that towards the ninth inning of the bear. So I don't think that's where we are here, unfortunately. But certainly I think for tech, when they start taking out the leadership in tech, that's a better sign that they're starting to take everything.
All right. Well, what about the Nasdaq overall? Let's broaden it out. 30% off the highs right now. It's been another awful week, about 8% lower for the week. And what's interesting, Jeff, is it's coming as there's buying of bonds with yields lower, which was sort of the opposite dynamic. It just kept getting hit hard by higher yields. So what do the charts show for the Nasdaq?
Well, they're still under this liquidation phase. I don't think we're done yet. In our view, we probably have to retrace at least 50% of the gains that we saw from the extraordinary liquidity environment that we had post-COVID, both fiscal and monetarily. So I still think that there's downside there on the Nasdaq. What we're seeing today, just as an example, is, volatility is working, short interest is working, really sort of a reprieve from what hasn't been working the last couple of weeks, but certainly looks to be more bouncy-ish than anything else. And when you get these big moves, these one-day single stock moves that are so large, call it plus double digits on a percentage basis, that also is very endemic of what you'd expect to see in a bear market. They have these nasty, vicious rebounds that keep the shorts honest, but that's usually the sign that you're in the teeth of it. So I still think we have more to go on the downside, unfortunately.
All right, coming back a little bit today, down only 0.2%. Maybe we'll go flat into the close. Jeff, thank you. Jeff DeGraaf,